Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, August 20th, 2018. In this video, we'll take a look at some trade ideas that stand out at this time, whether they're official or unofficial trade ideas. So let's just jump into the charts. It won't take long. I already covered the broad markets in a separate video this morning. That'll help streamline this one. So I only have about, I don't know, maybe 10 or so to go over right now. This one I mentioned in the market update today. I also posted this in the trading room earlier today, right after the market opened, showing this minor uptrend line in Apple. This is a 60-minute chart. And I made comment that for the first time since they reported earnings, stock has been going up, up, up. I've had a few inquiries. Was it time to short Apple? And I couldn't make a case to short Apple. There was nothing in the charts to say it was going to reverse, no matter, despite the big gains since earnings. Now, by the way, there's the earnings right there. You can see that big gap right there. But now the evidence is in the charts. We have this minor uptrend line. We're pretty very overbought. I'm sorry, overbought on the 60-minute time frame, and nice clean negative divergences. Again, that was posted this morning in the trading room. And let's take a look at what's happened since. We can see everything's playing out. We have a potential bearish cross. You can see if we zoom in really close here to the PPO, you see the blue line, the PPO line, poised to cross down below the signal line on any more downside. That'll confirm that negative divergence. RSI is crossed down below the 70 level. That's another, that's not a set in stone, but it is a sort of confirmation I use when a stock is overbought or oversold, because I often say overbought can become and often does become overbought, more overbought, or stay overbought for an extended period of time. However, the sell signals usually come, or at least it helps to confirm it on a break back down below that 70 RSI level. And you can see how that level kind of acts as support and resistance. We get above it on very overbought runs. It can stay above it for a while. So that's that. You can see we've crossed it back down below. And Apple, this is the biggest drop that it's had in any given day, I believe, since they reported. So the stock has had a voracious bid underneath. And let's just look at this chart again. If you're, I would view this as a pretty high probability trade. I have a pretty fair degree of confidence we're going to get more downside in Apple, but it's not a huge. I'm not looking for one of the high double digits or anything like that, at least at this point in time. But just to kind of look at what's happened since earnings, we had the big gap up, rallied, and it consolidated there for about a week or so. So that would be a natural support level. The top of that consolidation zone I have there around 210.30, and if it breaks below there, which I think it could, depends how you want to trade it. You can cover down right around 210.30, a couple pennies above maybe, or place a stop if it gets close to there. Put give yourself a point or so on the upside, maybe 211.30, somewhere around there, and then you can allow for a possible runner trade. I mean, there's a lot of hot air in the market in Apple, so that's one option is to you know just trail your stops down. The downside to doing that, of course, if you do bounce off that level and that's all we get on a pullback, well, then you gave back about 1% or so. Well, 1 point actually. 1 point on a $200 stock is a half a percent, so it's not a whole lot. Okay, moving on to individual trade ideas. And please remember, guys, this is where at almost all points in time, as a trader, there's a lot more profit potential, and it's a lot easier if you have the comfort level to trade individual stocks versus ETFs, particularly broad market ETFs. I always say this: if you buy or short SPY, the S&P 500, you are shorting. If you go long, you are buying the bullish and best looking stocks within the S&P 500, about 500 stocks in there, and you're also buying the worst looking stocks and sectors. You have roughly 500 stocks, give or take, 11 different sectors. So you have that all diversity. So you're not going to make 30, 40% on a swing trade normally in SPY, where you could do so easily on individual stocks. And it cuts both ways. Individual stocks entail more risk. You have quarterly earnings to navigate around, potential news. You need to know your company, and you also need to diversify. Just that's the key. Whether you're investing or active trading, don't put all your eggs in one basket. Diversify among positions, diversify among sectors. Don't concentrate all your money into tech stocks or gold stocks or whatever it is. asset allocation and diversification. That's the key. All right, so here's JT. Posted this one out on Friday as a setup. Right here, we were poised to break out, or we had just had one of the two, and it's moved up nice, and we already hit the first target. So there's a stock that provided a quick, roughly 7% pop so far, and it still looks good because we've taken that trend line out. We had that nice divergent low there. I guess maybe I didn't have this drawn out, or should have. I had these lines there, I believe, on Friday. So there's your positive divergence. And again, these are the um, individual trade ideas where you can do much better than trying to trade the broad markets, which have mostly been grinding around in a large sideways range all year. CYH I posted in the is a trade setup a couple weeks ago, I believe it was, and I also mentioned it this morning in the trading room that it had broken out. I mentioned this level here. Okay, it was August 7th. I posted that setup, and what I was stating would be, potential breakout here above this recent trading range right here that goes up to about 350, 347 or so, and it has broken out today. So nice little pop so far. Um, about up 4% on the day. Was up only a percent or two when I posted it this morning in the trading room. And let's see, volume looks okay so far. Nothing spectacular. So I'm not seeing it confirmed by volume, but just one to watch. And again, sometimes low volume breakouts do play out. What you want to see is it stay above the top of this recent trading range. When you see something like that, maybe come down here to the 60-minute chart and then draw a line, and you can see there that's that top of that trading range. So you can see there's the breakout right there. Ideally, you want to see some more volume start to come into the stock and it continue higher, and then that's where again go back to the daily charts, and you can see all the targets here. We have resistance at 378. That's that first horizontal line, and a pretty significant downtrend line to contend with. And if it breaks above that, then there's a lot of upside in this one, a lot of risk. You read up on this company. They own hospitals. They've just had the snot knocked out of them in recent years due to Obamacare and a lot of changes that have gone on there. Competition from walk-in clinics that spurred less people going to the ERs, more people using walk-in clinics now, but they're trying to get into there. So yeah, I see quite possibly 70% upside in this stock, maybe 34. But the downside is bankruptcy. There's a stock that's fallen from a high in just 2015. The stock was trading around 52, $53. But I look at this weekly chart. I really like the setup from a technical perspective. But sometimes these stocks with these bearish setups just collapse, but it hasn't broken out yet. And if it does, again, there's your potential longer term targets. I mentioned on that daily, what about a 70% gain, but I could see about 190% gain here when I look at the weekly chart based on the scope of this pattern and where my targets are. That's CYH. It'll remain unofficial now. Well, I'll keep an eye on it. I just don't I'm not seeing enough volume coming into the stock so far today. All right, moving on. SAFM. This one is an official trade idea. And have we hit our target yet? I should have had a price alert. Sometimes I don't get these alerts in there. No, not yet. Hit a high of 109.44. First target is 110.46, but it's playing out nice. And I put a sister trade to it on Friday. I'll get to that in a second here. This one's a packaged foods company, Sanderson Farms, and just a nice clean trend line, divergent low at support. These are the kind of trades I like, and that's why this one made the cut as an official trade. You see a lot of reactions back here. So there's a well-defined support level. More reactions here. It caught and held that support. That was bullish to see it hold support, and then it took out the trend line resistance, and you can see it's been moving up steadily since. We've had a few, nothing but green candles so far. A little profit taken today, but nothing much. And longer term, it still looks good. So we hit this target. My expectation would be for a reaction. I think it's a decent resistance level, so I wouldn't chase it here. We're almost to the first target. I would, if you're already long or want to get long, maybe a pullback or reaction off that level. And if you took it and you're holding this one, it's I believe a growth and income trade too. Not a huge dividend, 1.2%. But certainly swing trade potential all the way up here to that third target. So, set your stops now, maybe raise them to break even. I'll leave the official stops as is for now, especially for those targeting T3. But that one looks good. And then here's that sister trade I posted on Friday was PPC, another packaged foods company. and that one broke out after the video, or maybe it was breaking out then. I can't recall. There's Friday's candle right there. It broke out on Friday. Not following through today. I'd prefer to see some follow through, but with that being said, the train hasn't left the station on this one yet. So there is one that's already broken out. And let's see if I see anything on the 60-minute chart. No, no, but I would like to see it hold about these levels. If it goes much lower, it's going to come in a back test. It may be a failed breakout. So probably best at this point. Let's see here. What will we have to take out? You know what? I'd just say this. If it probably moves above, what was this, today's high, if it can take out today's high of so far of 1869, so call it 1870, maybe 1875, that would look good. That would show, would turn it green. It would start to follow through to yesterday's breakout, especially if you start to see some volume come in. So again, a nice looking stock. And again, these are, packaged food companies, so you're not going to get murdered on these like you would on a high flying biotech or tech stock or gold mining stock. They're more steady eddies, so that's, again, for people looking for just a way to diversify, if nothing else. You have money in gold and tech and biotech and utilities, and whether you're an investor or a swing trader, it helps you to smooth out the bumps. So that's what I'm trying to do, is spread out the trade ideas here. BILI. This was Joe Friday's pick in the trading room, and then I looked at that. I liked it as well. Took out that it broke out. There was a downtrend line. I told you I was waiting for a breakout of this downtrend line right there, and it has broken out. Had a little pop, and it's holding the breakout so far. It actually popped up and back tested, and it's moving up. It's looking good. So there's that first target there. It's probably, to be honest with you, I have it at 1150, but I would put it all the way up here to maybe about 1171. We'll call that a target zone. See some reactions up here. That's just the first target. There's a lot of room in this one. That's 5-6% there. If it gets up here to that second target area, and that should be a zone as well. There's certainly some reactions down lower. So call this T2 zone somewhere in there. So a lot of potential. Nice divergent low. And this one's more of a high flyer, doesn't have a long-term chart, a lot of trading history. Just only started trading back in April, early April of this year. But that's higher potential, high risk reward, and something like that. But I do like it, or I wouldn't have shared it. And next up, and again, thank you, Joe Friday, for passing that one along. Next one up, Tesla. Tesla, wanted to mention that it is now, you can see if at all along these targets here, these potential targets, support levels, 286.40, give or take, came close enough today so far. But this one just continues to pan out. And again, I highlight it only because it seems this is a pretty powerful divergent high, and I think there's more. Now, would I short it here? Absolutely not. In fact, I'm considering covering my position, trying to game a bounce, but I think I'm gonna hold tight. I considered it, and for now, I'm willing to ride out any counter trend bounces. I think there's a lot more pain to come for this company. I think what Musk did, like I said, will result in both, most likely criminal charges, or quite likely criminal charges. I don't know. They're pretty hard to do that, but against him and charges with the company. He was their CEO. I know he's tried to distance himself from the whole tweet thing. Hold on one second, guys. Looks like the battery just died on my mouse. I was trying to scroll around here. Let's plug in a cord. There we go. All right. Sorry about that. I was wondering why I couldn't move the mouse. Anyways, so yeah, I think there's more downside, both everything I'm reading fundamentally with what's going on with the company. Um, the latest is Saudi Arabia's sovereign wealth fund is now looking at striking a deal with one of Tesla's rivals, another, what was that, Lucid, another electric car company. And, that was, Musk saying that, claiming that the Saudi sovereign wealth fund was the one that was, he thought was going to help fund his buyout to go private. And so now that's looking a lot less likely. I mean, you could smell a rat 1,000 miles away when that tweet came out and everything thereafter. But anyway, we'll see. Well, I think it's safe to assume that the Saudi Arabia sovereign wealth fund is not going to uh, facilitate any buyout anywhere close to 420 a share for Tesla. All right, so let's just move on. And if so, again, longer term bearish implications for this stock. Let's not forget, and this is the thing I try to impress. I'm living sometimes in the daily chart right now because that's, you know, day to day, that's what I'm concerned about, where to cover or add to a position. I'm just kind of sitting tight on what I have now. I have, good sized position in there. But this is what I'm looking at. We have this divergent high right here. We had an equal high. It failed at that 38.52-ish level. So we had equal highs in price versus lower highs on the PPO and MACD, and this is on the weekly time frame. So there it is. And if we break that trend line on a weekly closing basis, as well as this level here, there's a 277.73-ish, give or take, support level. And you can see that's a significant level. And I love to see this when I'm trading a stock. Intersecting support or resistance level. So I see a lot of reactions at that level. Tesla broke out. That was bullish. It broke out and it's held that level other than one brief intra-week or one brief weekly break, and we snapped right back above it. So this on a scale 1 to 10 is up there. It's an 8 or better on as far as a well-defined, how well-defined that support level is, how well watched. Then you have this uptrend line coming in. So to see a big red candlestick close below there, that is not good for Tesla. That's about as good of a sell signal as you can get for a swing short. Actually, I'm trying to draw this line right here. And I think there's, we come back down to the bottom of this trading range if and when that's broken right there. I'll try to quantify it for you like I like to do. That would be a drop of about another 36% or so in Tesla. And I'll say this, swing trading a stock like this with such a volatile price history is not for the faint of heart. You're not going to swing trade it down, even if I'm right on that call for a drop of, and again, we need to break that trend line, but I think it'll happen. I really do. Now, let's say I'm right. You will not get there if you're running, if you usually allow 3, 4, 5% stops on your trades. This thing is just too volatile. This stock has counter trend rallies and swings that range, in any given day, this thing can go up 3 or 5%. So the only way to do it, if you got a favorable entry, this was a time to short, right around or shortly after that news. Now you're very profitable and you can allow a pretty wide stop if you want to swing it all the way down and try to ride out the counter trend rallies. Or you can actively trade. You can cover on support if you think there's going to be a bounce. Like I said, right now, I'm content just sitting tight and letting these daily charts play out, not trying to game the counter trend bounces. If we get down here and the charts confirm, possibly here to that 271.73, although really looking about that 244.35, and the charts confirm, that's where I may either reduce or cover my entire position. Okay, gold continues to firm up. There's the daily chart. You can see this was that big red, looked like a capitulation selling candle, big volume bar. I'll have to move this for you. See, there's a big volume bar. That they may have been capitulation selling. Maybe not. We'll see. But so far, we've now moved back above there. So we're entering the gap. So let's look at this on a shorter term time frame. There's a gap right there. Let me give you a cleaner board on the 60-minute chart right there. So there's the bottom of the gap where the horizontal line is. There's the top of a gap. So we would go to gap backfill and quite likely a pop here. And remember, there's certainly, and I've been making the case for a potential bottom, a major bottom in gold. There's that, the breakdown of this trend line here on the daily chart. So let's watch it. And let me show you one other chart here. Okay, here's a GC. These are gold futures. This is a 15-minute chart I posted in the trading room recently. Last week I was highlighting this downtrend line right here, saying that'd be bullish if we get a breakout. We did. We broke out, back tested the trend line right here, and we've been moving higher since. So these are all potential targets up here. You can see the levels marked to the right there in white. It's about 1190, 1199, 1200-ish. And then this is a big level back up here around 1211 or so. And you can see I've added some support lines that should ideally contain a pullback, any pullback in gold, particularly this one down here around 1179. Really want to see that one if gold does pull back to be contained. So gold still near term looks like more upside in the near term, and possibly longer term may have put in a significant bottom. Again, I've done extensive coverage on gold and the US dollar recently, and it's nice to see the dollar index is actually up today, and gold is still chugging along green so far on the day. These gold futures are up about 0.75%. And I'm sure there's some of you out there asking right now, well, what about GDX? GDX will follow. Right now, it's well, trying to, sometimes there's a disconnect that I've seen last for easily days and sometimes weeks. But if gold continues to firm up, there will be a game of catch up, and there's nothing more beautiful than watching GDX play a game of catch up to the upside or the downside. If you're short, sometimes gold starts correcting, and the miners hold up, and then they play a swift game of catch up to the downside. Again, this all depends on how the charts of gold and this is just the GDX daily here. You can see this big reaction low from late 2016. We overcut it. We overshot it. But if we recover that, number one, that would be bullish. And that's, I don't have that line exactly where it needs to be. There was a low right there, give or take around, if I can get it on there, about 1863. Yeah, and we've jumped back above there so far. Not by a lot, but again, this will depend on what gold does. There's a big gap to target for you GDX traders right there. You can see a gap. It's a logical target place, and then bounce all the way back here. If gold firms up, that 2114 was very significant support before. A lot of reactions 2017, 2018. Now that is resistance. So that would certainly be, if you ask me what's a good swing target, if gold firms up here, and even if it's just a multi-week counter-trend rally, there's about 13% upside in GDX. Multiply that by 3% for Nugget, you have a pretty nice trade there. But if you take Nugget, you have to reduce your position size by about a third. That leverage cuts both ways, works for or against you, so be careful there. And it looks like a little sort of mini head and shoulders inverse bottoming pattern right there. Here's what GDX needs to do, I think. And of course, with gold cooperating, GDX needs to pop up above, we'll call it 19 to be safe. I think a pop above 19 will send GDX up for a backfill of that gap there around 1973. That would give you a quick 4%, 4.25 or so on GDX. Let's wrap it up here. There's a lot of trade ideas on my watch list, but those are some of the ones that stand out right now. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.